think, act, and prosper. You are now tuned into the Money Level Show.
And I compare, uranium to like almost like the crypto space, not in terms of like the same type of asset, but just being the people's, kind of investment where, you have like average people that are able to make a massive amount of money in this trade, and because uranium was so beaten down, even for me, like, and my in-laws, like, I was able to, buy some stuff in their IRAs and stuff like that. And just like you got average people being able to come in and make a massive amount of money. I mean, similar to like, Bitcoin, people that, were coming in and stuff, super early on and stuff. So I think it's a great trade, and it's a great play for a lot of people that are, the average retail investor that may not have a lot of capital or, or whatnot.
It's true. Yeah. There's no bull market like a uranium bull market, with maybe the exception of crypto, and some other resources can move similarly. But the thing with the uranium market that's different from crypto or other resources is that there's just such a small number of investments that are even able to trade within the public space. There's 65 companies, whereas there's thousands of coins, there's thousands of gold and silver companies. There's multiple hundreds, if not thousands, of oil companies. So the resource investor is kind of a unique volatility-seeking person, but the uranium market is so unique because of its small size that when real money flows into it, the moves are huge. And we see that. And oftentimes, just like December of last year, when the money comes in, it's not always at a moment that makes sense to most retail investors. And so that's one reason why we don't really like to trade in and out of our positions. I mean, we'll change our positions based on company news and company developments. And obviously we do some options trades as well that expire, so we can, cycle that cash into new positions. But for the most part, we don't like to try to time these things, with an exception of trimming gains and ultimately selling. But swing trading is what I'm talking about. We don't like to do that because it's the points where the stocks move, especially to the upside, can be so surprising and so fast that to try to time the bottom, if you miss it by a day, you might have missed a 20% move. So we really like to add in tranches. That's always what we recommend to people that are just arriving to this investment, is, especially based on where the market is moving. Technically, looking at the charts, if things are a little bit overstretched, we definitely don't recommend going in with full positions, but buying one tranche and then another one a week later, another one maybe 2 weeks later, hanging on to a bit of cash in case we see a bigger correction or a cyclical downturn like we saw in July, August. Then you can go in heavier when things are really bloody, I guess.
Yeah, definitely. When there's blood in the streets, that's when you buy.